Hey guys, I'm Michelle, and today we're going to be talking about how to keep track of your income and expenses, how to keep your books as a solo massage therapist, because so many of you are becoming licensed massage therapists or have been licensed massage therapists for a while, and you're like finally reaching out and trying to branch out and do your own thing. So this is it's some of the most boring, tedious stuff when it comes to being a massage therapist, but doing it right makes a difference between being a person that has some longevity in the career and people who don't. Because if you don't keep track of that income and those expenses and do all of your deductions right, you're going to be wasting money. And if you can't keep track of your taxes and set money aside for that, you're going to be in trouble much sooner than you think. I also want to reiterate that it's way easier than you think as long as you build the systems from the beginning. But it's never too late. You can start your systems now and change the way that you're doing things if you have already been a massage therapist that's been working on their own and trying to figure this out. I've been working on my own for several years, and in the process of creating this video, writing the script for it, I found out that there were a lot of things that I could be doing better. So if you've been a massage therapist for a little while and you are watching this video, you can take some advice and make some tweaks, but it really helps to start these systems from the beginning. So for those of you who are just getting started, hang in there and we're going to get into it. First, I just want to introduce myself. I'm Michelle. I'm a licensed massage therapist. I do create resources for the MBLEX, and a lot of you know me from there. But I also wanted to create this separate channel, the Massage Intake, for helping massage therapists with their longevity emotionally, physically, and financially in the field of massage therapy. So make sure and subscribe if you want to be in the loop for future videos that are coming out for this. And I want to also let you guys know that I'm creating a notes document of everything that I'm talking about in here, so you can go through your checklist of what to do when you're getting started. So it's something that you can just print out or have as a document that you can go to when you're starting your business. So let's get into it here. So first things first, you've decided to kick off your business on your own. Of course, first thing you're going to need to do is grab yourself a business license. So that's not part of the bookkeeping yet, but what you need is a unified business identifier. You've acknowledged with the state or with your local municipality that you are an actual business owner. So you take that special number that you get from them and you go over to your bank or your credit union and you start a business account. That's how you're going to keep everything separate and legitimate. It really helps a lot. And when you set up that business account, that business bank account, you're also going to be setting up pockets for expenses. At the end of every day, you're taking that income, or on a regular basis, you're taking that income and you're separating 20% for taxes, 10 to 15% for expenses or more for expenses. And then anything that's left over is what you can pay yourself out of on a regular basis. I would wait as long as possible to pay yourself, and just make sure that you have other side incomes while you're establishing your business. Because if you're not generating enough income from your business to live off of, and you have to dip into those taxes or those business expenses, then you're not going to be able to stay in this field for very long. You're not going to be able to be a solo massage therapist for very long if you're dipping into your taxes and your expenses. Business is just not going to work. So you can only spend from what's left over after you've deducted from those pockets. Okay, I'm going to talk about how to keep track of all of that on a regular basis and make suggestions about how you're going to do that later on in the video. So hang in there. Now you've set up your bank account where you have your savings accounts, your little pockets to put your taxes and to put your business expenses money into. Also request a debit card that you can use to pay for those business expenses, which really helps to keep track of expenses as you go, and it adds legitimacy if you do get audited, which is so rare. Okay, just got to say that. Don't freak out about every little thing. Oh my God, I'm going to get audited. What if I don't have proof? It's really rare, but you have so much peace of mind if you do your paperwork correctly, if you're keeping track of all of those expenses. We're going to get more into that. So moving on to keeping track of every source of income. Now, payment methods will add up really quickly. So they can be cash, checks, debit, credit, Apple Pay, Venmo. I've got people pay me all kinds of ways, or they have paid me all kinds of ways over the years. And just if you just count what's going into your bank account, like through your debit card reader, that's not going to be all of your income. So what I end up doing is I have a separate ledger. You can do this digitally, or you can do this with like a paper notebook. I use a paper notebook to keep track of my income. If it's been a really busy day, you can add it up at the end of the day when you're working, or if it's just one at a time, a trickle here, a trickle there, write it down somewhere. So you're constantly keeping track of exactly how much you got paid. If you're taking gratuities separately, that is a separate income that you have to keep track of. But if you have one place to write it down, it can be extremely simple. So keep track of that in one location. Some people have like QuickBooks and they can log into it and just type in what their income is every day. So that is one good way. But I'm an old school, old-fashioned person, and I just have a notebook that I write all of that down. I add it all up monthly because it makes me feel good to see how much money I made in the last month. A little bit here, a little bit there. It doesn't feel like a lot, but I like how it feels at the end of the month to see how much it actually was. I'm like, wow, I actually made a lot of money. That feels really good. Make sure that you keep track of gift certificate payments separately from your regular income. So someone buys a gift certificate, for example, for Christmas. It's at the end of the year. And you write that down along with the serial number that you put on your gift certificate. So you have that written down in your ledger so that when the person goes to cash it in, the gift person gets to cash it in March, you just look at the number on the gift certificate and you just check it off of the ledger. It's been taken care of. But since you were paid in December for that Christmas gift, that is an income for that month, for December, for that year, when you go to file your taxes come the following winter and spring. So that's about gift certificates. And then for trades also need to be added to your income in the month or in the year that they actually happened. So make sure you write those down because you are responsible for taxes on trades. Let's dive into expenses and how to keep track of that. Once again, I'm a paper ledger kind of person, so I write all of that down, and I have a little folder on my computer where I do a screenshot of the receipt of things that I buy online. I put that in a folder of my receipts. And then for paper receipts, if I'm buying something in person, for example, I like to pick up a lot of my linens at thrift stores when I find good ones that aren't stained and don't smell funny. So I go to thrift stores, I get a receipt, I put a little circle, use a pen and put a little circle around the specific items that I want to deduct off of that receipt if there's more than one thing that I get. And then I have a little box that I just put all those receipts in. But what I do is when I go to write down my expenses, because I have two ways. I have the receipts and I also write them down separately, which makes things a lot easier. I have the receipts if I do get audited, but I don't typically play with those receipts anymore after I put them in their special place because I'm doing my own books. Those receipts are only for in case I get audited. I just have them. But having that ledger where I write the date, the item, and the price of it, how much I did pay, including taxes on it, that's the list that I bounce off of when I go to file my taxes at the end of the year. While you're doing that, it makes things a lot easier for your bookkeeper or for yourself to have those expenses categorized. Because when you go to file your taxes, if you're going through TurboTax using the self-employment platform on TurboTax, it will ask you to separate your deductions, your expenses into categories. So those categories can include supplies, which are your oils, lotions, linens, your table coverings, equipment, which is if you buy any tables, a massage chair, any parts that go onto those pieces of equipment, your hot stones, your tools, your chairs, like for your clients to sit in your room, or if you've got like a space heater, things like that. So like my clock, these are all things that you can deduct. A lamp or the sparkle lights that are going around the room in here. These are all things that you can deduct as equipment. Then continuing education is a deductible expense for massage therapists. Paying for your memberships or your license renewal fees for your state, paying for your liability insurance, marketing and advertisements, that's like ads that you purchase in like local newspapers, that's your website, that's your business cards, like your paper, your tangible, your flyers that you use. Those are all deductible business expenses, but in their own category. Rent, if you're renting a room, or you can deduct the cost of a portion of your house if you're using your home for your massage room. Mileage, if you're a massage therapist that travels. So if you have to travel a very long distance to get to the location where you're massaging at, or if you're doing home visits, then you can add that mileage. So the rate for 2026 is 72.5 cents per mile. So that's going to be including gas and wear and tear on the car. That's just what they pay. So you log the date of the work that you did, the purpose of it, and the miles per trip. So you can add that up. I've never done that. I've always kept things pretty local. So I would love in the comments if you know more about doing that as a massage therapist, if you write in your experience on that. Laundry and cleaning supplies. Laundry is like the biggest regular expense that I have outside of rent. So make sure and have that in its own category. Booking or bookkeeping softwares, if you're paying for that. So like if you're using like a Squarespace booking, or there's quite a few other booking softwares. I just book myself, so I don't use any of those. I haven't found a booking software that suited me. If you are paying for those, add that to your expenses. Also, if you're filing your own taxes through TurboTax, you do have to pay for the self-employment portion of that. Like if you don't have to pay for TurboTax if you're filing as an employee, but if you are self-employed, I can't remember if it was $100 or $150 last year, but it was at least $100 last year, and you can deduct that from your taxes, from your federal taxes. And then if you're paying for an accountant or a bookkeeper, and then the business portion of your cell phone bill, which I haven't done yet because it just accounts for so little of the work that I use my phone for. So, I mean, if you're really good at keeping track of everything, you can deduct so much out of your business. And that's what that separate portion of your bank account is for, so that you can keep track of it out of there. And then, what's left over is what you get. Once a month, I total up my ledger for income and expenses. And that's not necessarily because you have to do it. You could just wait all year to add everything up as long as you're keeping track of it. I like to do it monthly because it helps to orient me about how I'm doing. And I love to see the progress. I love to see the progress of continually increasing income. So it helps me to keep track of, where can I be more mindful about this or that expense as well. So it just helps to orient you about where you are right now. So I've managed just fine having never had a bookkeeper. And I know a lot of people feel really overwhelmed, and perhaps you've got somebody that you can trade services with for bookkeeping with massage, and they're people that can help to advise you. I definitely want to suggest that if you feel overwhelmed by all of this, just reach out to some bookkeepers and find out what they charge, or ask if they're willing to do a trade so that they can advise you on how best to keep track of your income and expenses from the very beginning. I just want to reiterate that I've never had a bookkeeper, And it hasn't been the terrible, overwhelming thing that you might suspect to keep track of your own books as a massage therapist on your own. Now, one huge thing that I want to underline when it comes to keeping everything on track, being a solo massage therapist just starting out, is to not live paycheck to paycheck when you're getting started. Now, that might mean having to extend yourself a little bit because you're trying to kick your business off. But if you have other sources of income, if you have other people supporting you in some way, it really helps you to be able to only spend the money that you've actually earned after keeping a real chunk aside for deductions, so that you don't end up overspending and getting yourself in trouble. So there's another portion that I want to talk about, but first I just want to go over everything here to make sure I didn't miss anything that I said I was going to talk about, because I forget easily. Okay, so here's one. Quarterly estimated payments to the IRS. I did not do this my first year as a solo massage therapist because I wasn't sure how to do it. I was like, I'm so overwhelmed with trying to just start a business as it is, having to navigate the IRS. Ugh. And I regret that because I would have been more on track my first year doing things on my own and not been as overwhelmed with having to scramble for the money that I needed to make up the gap in how much I had saved, because I thought that I didn't need as much as I actually did. Excuse me. So quarterly, let's say you kick off your business at the beginning of March and you have a few people that you massage. You have 5 or 6 people that you massage, and I'm saying picking a number, $600, 20% of $600 would be 60 times 2, $120. So $120 is what you would set aside for your federal taxes, just in case, huge buffer. So then you log into your IRS account and you go into make a payment on or pay your taxes on the IRS website. And it will give you the option for the next year. There's a drop down that you can click on for the current year, and then go to another drop down, estimated tax. And then you can type in how much you're going to pay and send it off. And that's typically you'd want to do that at the beginning of the following quarter. So the quarters run January, February, March. That's first quarter. Second quarter is April, May, June. Third quarter is July, August, September. And fourth quarter is October, November, December. So on the first day or on the first month of the following quarter is when you would want to pay the taxes that you estimate that you would have to pay for the previous quarter. And then throughout April, May, June, you add all of that income up. That's gross income before deductions, and you pay that 20%. So if you're keeping track of that at every quarter, it's like, oh no, the money just disappeared because I'm paying like $3,000 a quarter right now. It's like, oh, that money disappeared. But what happens is that you go through your deductions when you're filing your federal taxes for the year. When you come January, February, you file your taxes for the previous year. You've made all of your deductions. You're going to end up getting a refund, and yay, that's wonderful. You can funnel that back into your business, or you can, pay for a vacation or something like that. But as long as you are a little bit ahead, you're always going to have the peace of mind of knowing that your business is taken care of. And it makes you feel like such a big responsible person to have paid ahead on your taxes. So those are the biggest pieces of advice that I have is don't live paycheck to paycheck when you're starting out, so that your books can stay clear and clean and feel good energetically, and make sure and file those quarterly taxes and pay those quarterly taxes from the beginning. Okay. It's not hard. You can do this on your own. You just need to set up the systems in the first place. So make sure and click the link in the description or in the pinned comment to take you to the outline that I created for this video so that you can go through and make sure that you have all that stuff lined up. And you can also like print it, but still talk to a bookkeeper and compare and find the right path for you. And I wish you the best. I know you can do this being a solo massage therapist. And I will see you guys in the next video.